Today, I'm going to show you how a trade can meet a strategy. These are two perspectives from two traders on the same market. One draws zones one way, the other draws zones a bit differently. And how important those zones are. It's what separates take profit from stop loss. Secondly, that drawing zones is really a subjective thing. Here I'll show you both drawn zones, and actually from my perspective, neither one is wrong. On the other hand, there are certain experiences that lead you to draw either one zone or the other. And also the awareness that, as I like to say, the zone should be the way it is according to the market, not the way I would like it to be in the market. But really, these zones, most of the time, what we trade the breaker tend to be quite subjective. So now let's try to draw out a trade that's here on this currency pair, euro-yen. And the price was falling down. Then here it formed what I consider to be a double bottom with a signal. There's a star, there's divergence, so it's a kind of reversal pattern. That means there's a neckline here that was broken. There's a retest of that neckline, and that's already the direction. You can see there was a pretty clear downtrend here, and now it's starting to turn into some kind of uptrend. In that trend, I like to trade in the direction of the trend, which means that once I recognize the double bottom, I would really like this retest for a long trade with a stop below. And further along the way, it brings various other opportunities. Among other things I can mention here now, I'm focusing on those zones that I'm going to talk to you about here. This zone can be named like this, because you can see it breathing here. I have this zone here, and it's basically fulfilled. I need to have that plan out to take every swing, but at least two to show me that there's that price level, that the zone is strong and valid, that I need at least two swings that will react to it, to some price level. So here I have one price point, another one. That could be one of the so-called zone drawings. Or I might notice that the zone was actually a bit lower here, meaning that the reaction to the zone already started here. And then the question is whether to include these wicks or not. Because I'm already close to that zone again, but I'm making the zone a bit too wide. But the question is whether this is one zone or two zones. Maybe this is one zone and that's another zone, but I can merge them together. Or I can help myself a bit, not with this particular history, but with what happened a few days back. That means I can even stretch it a bit. Here I have some reaction to that zone. And now it reminds me here, I have it from one side, from the other side, this zone here, it really could be a bit lower. So that means either include it like this or like that. Let's look at the conscious option. We'd also see that this zone, whatever it is now, was broken through impulsively. We'll actually let it play out there. Today is a bit educational. They're a beautiful zone. And now this zone is really both wide and was broken through impulsively. And actually this one was broken through impulsively as well. We have both options equally valid, but with our strategy, we don't touch this at all. But I don't have to. I can have two zones. This is one zone, and then I'll have a second zone here. From this precise starting point, from the very top, from this particular position, all the way across to this specific one, this is the second zone. And now the tricky part is actually setting up the trade itself. We're waiting for an impulsive breakout of the zone. Well, here it is. Here, in both cases, the zone has been broken through the zone. Here, the wide one is beautifully broken through. The bow was simply pulled down impulsively. And the shot is thinner. The zone was just broken through impulsively. Now we'd want that retest and for it to go upwards. That's one way to look at the market. In one case, when I have the zone narrower, I place the entry here above the zone. But I set the stop loss behind the breakout candle, meaning order is in place. Here I have the stop loss, and behind the breakout candle I have a pretty small stop loss. And I set the take profit at 2-1. Okay. If I look just at the H4, there's a ton of space here. We're going down, now we're going up. At the same time, I have here whether I go here or to that swing. At this moment, I don't really care. Or the second option is I'll take into account the entire zone that's there. And now it doesn't matter whether I include these points or not, because even if I include those lower points and the zone is big, I still have the breakout candle only here. So now it doesn't really matter whether I include up to here or all the way here. It's the same for me. The setup is exactly the same at that moment. And the second setup looks as follows. So once again, it's a very long, again, at precisely the same value. But now I put the stop loss behind the breakout candle, just, I don't know, 2 to 3 pips. For the euro, even just 3 pips. And now I'm going for a 2-to-1 risk-reward ratio with this setup. Again, we can check on the H4 to see if I'm still okay there. I'm pretty comfortable with it. I'm even going below these. There's some zone here and below it, and I'm pretty comfortable with that. So with H, the trade is set up, and we can take a look at how it played out. The price moved beautifully, even higher. So far, it kept moving upward. So it's not some kind of quick drop down that would make the break look fake. So there's absolutely no indication of a false break here. This is exactly the setup we'd want. It even climbed higher. So if we had traded it, you can see it. The lower line here, that's actually the first trade, the one with the deeper zone, and the T5 is up here. So what I do is, this little square is the original one, and the bigger square, the larger move, is the second trade that's been set up. And the price really made its way all the way up beautifully. So there was trading there. I have no problem with that. It drops down nicely again. That's exactly what we want to see there, a slower pullback, not just in 1 or 2 candles, but so that the market forms some kind of structure. That's what makes it better for us. And we're following the trend. So now we're going up, and now there should be some kind of correction downward. That's exactly what's happening there now. It's even taking a bit of a breather. Some kind of weird R shape. We drop down from the entry. Yeah, now our pending order has been triggered. Simple as that. We gave it time, we gave it space, and our pending order was triggered. Both trades are going absolutely smoothly so far. Let's keep going. So it's hovering above the zone. You could say it already gave 1R here from the small one, from the smaller stop loss. It already gave 1R. And here what's happening is that it gave 1R and then bang, right? It was some news, I think, even though it's euro. This was news, I believe, about the dollar. It sent the market down, and we got stopped out here. But with the second setup, we haven't been stopped out yet. We were supposed to set that stop loss, but somehow we ended up actually setting it. Both strategies, both setups were according to the strategy. And the key zone was drawn based on 2, like the intuition of 2 traders. And now it's going back again. At least we're out of the trade. So the strategy is the same. Impulsive breakout, lazy pullback. We go in after the breakout candle with a stop loss. And one of those strategies gave me 2R. And with the other, I took a -1R once. And now the strategy worked. The strategy didn't work. Well, in my opinion, it did work, but now it's really just a question of whether that zone was just these two swings or if it was lower or if it was actually this wide. That's the subjective part, which unfortunately comes with trading this strategy. It's simply a downside. That's right. The perception of these zones is just extremely subjective. It's hard for beginners, sir, actually. Not just beginners, even more advanced people to perceive these zones. But you have it in you. I always try to explain it like this. When someone paints a picture, you either like it or you don't. You have a feel for it or you just dismiss it. Like art is basically just a kind of smudge of everything. It's the same with us. You need to have a bit of that feeling, and it's not something that comes right away. You have to work your way up to it. Just like with good red wine, at first it just feels rough on your tongue. It's just not good. It's sour or I don't know what. You don't like the taste. And you have to work your way up to it, to that good red wine. But most of you start with sweet white wine. That's the good stuff. And that's how it is. If you want to be a winemaker, you have to develop a taste for it, train your taste buds, and it's the same here. You have to be on those charts. You have to go through many repetitions before you start noticing the things around, the things that are there, and where to identify the right zone. I really think the zone was here, that the zone was here, that this was just a touch of the zone, but he was fighting with the zone here. And here, behind this zone, we correctly placed the stop loss, so the zone started here. But the strategy we've built to keep it simple is a zone that needs at least 2 points, which even in the first case was followed, so it wasn't wrong either. It was just unlucky that the market received that news. And that news pushed the market even further on another currency pair, or rather on another currency. It mainly moved the EU RJPY, and then another piece of news probably sent it back in the direction of the trend. News events can also be traded in some way, and we'll talk about that as well. I see it. I see the video. All right. Take care.